Breakouts are one of the biggest money-making opportunities in all of trading, but a false breakout, start with one of those. Breakouts are one of the biggest money-making opportunities in trading, but a false breakout, breakouts are one of the biggest money-making opportunities in all of trading, but a false breakout, get one of those and you're not printing money, you're burning it. This video promises to filter out false breakouts using something called momentum candles. So I'm going to review this video, point out anything he left out, and then actually test it out myself.
Breakout strategies. Setting a support line, then a resistance line, and waiting for that one moment to happen, when the price suddenly breaks through. And when it breaks through, it really breaks through. But how do you trade this strategy successfully? Is there even a strategy? Are there any secrets? Well, yes, there's a couple. And lucky for you, I'm about to share them in this video. Let's not waste any time. Let's get straight to it. Has this ever happened to you? You set your support line, you set your resistance line, and wait for a breakout to happen. Once you see that the price suddenly breaks through your resistance, you enter a trade extremely excited because you're prepared for a huge jump in price. You get your popcorn, sit down, stare at your monitor, but then suddenly the price reverses and dips. You stare at your screen confused on what just happened and your portfolio just tanked. Well, I'm going to teach you a secret so this never happens to you again. So the first question we need to ask ourselves is, what is a breakout? Well, a breakout is when you have a support and resistance where there are multiple key rejections for both. The actual breakout happens when the price bursts through one of those key levels. And notice what happens. When the price does break through, it starts soaring, making this point right here a great entry point. But the question is, how do we find setups like this, where the market could potentially have a breakout? The answer is breakout patterns. I'm sure you've all seen these before, but there are multiple key breakout patterns you should have in the back of your head when trading.
Okay, so we got to understand what a breakout is. So first of all, what's a breakout and what's a breakout strategy? We got now that a breakout strategy is when the price breaks through a key level. Simple, right? And a breakout strategy is going to involve marking that key level and then waiting for it to get broken. And then we have these breakout patterns, okay? So these are some patterns, and you want to be able to identify these. But the problem is they don't always look like this on the chart.
There's the flag, wedge, pennant, triangle, and rectangle. Now the problem I see a lot of people doing is they are looking for the exact price action that is in the pattern image. The price will rarely mimic the exact pattern, if ever. So you're not exactly looking for the exact price action that happens in the image, you're looking for the key support and resistance levels that make that pattern. Now,
another way of saying this is you can't just learn the pattern and think that if you find the pattern, you're gonna win. You have to actually know why the pattern works. That's the key.
To be honest, it doesn't matter which pattern you get. Hell, you don't even have to memorize the names of the patterns. The key thing you have to take away from this is that all these patterns have something in common. The price consolidates, making two key levels, then eventually breaks out. So here we found price movement that looks as if it has multiple key points of support and resistance. The more key points, the better. We acknowledge this is happening, so we put a support and resistance line, making a flag pattern. So far so good. But this is the point where people usually make the mistake. So what happens is people usually wait for a breakout in either direction. So once someone sees the price break through their resistance line, they immediately enter the trade right here. But it turns out it was a false breakout and the price reverses in the opposite direction.
Okay, one thing he left out here is something called a third leg trap. If you see 3 moves up like this, now I want you to count these moves with me because a leg is a move up and you want to start to practice counting these. So check this out. We had 1 move up here. That's 1. We had another move up here. That's 2. 1, 2. Then we had a third move up here. That's 3. This is called a third leg trap. And what you will see very often is that the trade goes up to make a third leg and then reverses down the third leg up. So what you can do to avoid false breakouts in this case is count those moves up and then avoid entering on the third one and instead enter on the second move after the first move has shown momentum.
This specific trader would have lost a pretty decent amount of money. I'm going to show you how to prevent this from happening so we go in with a greater chance of the price going the direction we want it to. The first thing we need to understand is what's called momentum candles. Momentum candles can have many forms, but usually it's one big candle with a large body, or 3 medium-sized candles all going in the same direction.
So those are going to be what we're calling in this video momentum candles. So we got now that false breakouts occur when the price temporarily breaks the key level but then reverses, just like in our example, right? But now we have these momentum candles, and our momentum candles are going to help confirm whether or not the breakout is likely to succeed. A breakout can either fail and be a valid breakout, or it can succeed and be a valid breakout, or fail and be a false breakout. So here's how to actually identify whether or not that breakout is likely to be successful or likely to fail. And that is this: 1 large candle or 3 consecutive smaller candles in the same direction.
These 2 forms of momentum candles are going to be what we are looking for. Let me show you an example. So in this example, we have a set of multiple higher highs. So we set a resistance level right here. Then we have a key support level here because the price reversed multiple times at this level. And now we wait. We see a pretty decent sized candle form, and then it breaks the resistance level. This matches our definition for a momentum candle. The problem is only the tip of it broke out, so we are not counting this as a momentum candle. For us to be able to count this as a momentum candle, the majority of the body would have had to have been crossing the resistance level. We would also consider this a momentum candle if another green candle appears outside of the line like this. But unfortunately, it was a red candle instead, so we ignore the signal. Let me show you another example.
Now, why would that be a sign that you do not want to enter on that breakout? Because that shows selling. If the buyers are confident that the price is going to break out and continue moving up, why is there selling? You would need to see sustained buying. In other words, another green candle instead of a red candle.
So we ignore the signal. Let me show you another example. So here we have our support and resistance level set up. The price moves and a decent sized candle breaks through our resistance. It's not a momentum candle because it does not have a big body. So we wait for further confirmation. A second candle appears, but it's still a pretty small candle. And as we said before, we will only count it as a momentum candle if it has a huge body or there are 3 green candles. So we wait again. Then a third green candle pops up, which is an extremely bullish sign. So this is where we enter the trade. Now, there are 3 different scenarios that could happen.
One thing I want to mention that he left out is the size of the candle bodies, okay? Notice here something very obvious, but you probably have to pay attention to it to notice. This candle is bigger than these 2 candles. In fact, this candle is at least probably more than the sum of both of these candles. This candle is not just equivalent to the size of these 2. It's probably double, okay? So that means what? That means that the buyers were confident here and here. That's why there was 2 consecutive green candles. But the fact that the third candle is much bigger shows you that the confidence of the buyers is going up, which means this is a very strong breakout. Very simply, do the newer candles get bigger or smaller? If the newer candles in a breakout get bigger, then that means the breakout is very strong. If the newer candles in a breakout don't get bigger and they get smaller, then that means the breakout is weak.
The price keeps going up from here, the price goes back down to the resistance level and bounces off, or the price breaks through the resistance level and falls back down and counts this as a false breakout. So what should we do? Should we wait for a pullback to happen, or should we enter the trade right now? Well, what I like to do is set up a strategy, so the odds are always in my favor no matter what the outcome is. Rather than wait for a pullback, I'm going to enter the trade at the close of this momentum candle. Then I will set my stop loss right below the resistance level. This way, if the price what I like to call the two-step take profit system. This is how it's profit. To make sure we are, it's a very low profit. Or if the price of the trade at the close of this moment as a false breakout. So what should we do? Should we wait for a pullback to happen? Or should we enter the trade right now? Well, what I like to do is set up a strategy, so the odds are always in my favor no matter what the outcome is. Rather than wait for a pullback, I'm going to enter the trade at the close of this momentum candle. Then I will set my stop loss right below the resistance level. This way, if the price does end up going down and doing a pullback and bouncing off the resistance level, it does not reach my stop loss and I still make profit. Or if the price decides to go straight up from here, I'm in the trade. Considering this candle right here is a momentum candle, it's a very low chance that it'll be a false breakout. But in the off chance it were, I still have a stop loss in case the price decided to drop. Now that we have our entry point, we need to figure out an exit strategy. With breakouts, they tend to have large upsides. So if we decided to do just a normal 1.5 ratio, we would be missing out on a ton of profit. To make sure we are taking advantage of the huge profits, we're going to be using what I like to call the two-step take profit system. This is how it works. First, you find your entry signal, then put the stop loss below the resistance line. Then we're going to set our take profit line at a 1.5 ratio. Once the price hits our take profit mark, we sell half of our shares to guarantee that part of the profit. The other half will stay in the game for more gains. Next, we'll raise our stop loss to our previous take profit mark. Then our next take profit mark will be declared by an indicator. That indicator is the chandelier indicator. To add this indicator, just go to Trading View, go to the Indicators tab, and type in chandelier stop. Then go to the indicator settings and change the ATR multiplier to 2. This indicator will give us our exit strategy. It's very simple. We sold half of our shares at the 1.5 profit mark. We let the other half run. We set our new stop loss at our old take profit mark, and we will exit the trade once the chandelier indicator changes colors. So right here we would have sold the remaining of our position because the chandelier indicator changed colors. Notice all the extra profit we made by only selling half of our shares. If we would have sold all of our shares at the 1.5 profit mark, we would have missed out on a ton of upside. Let's see one more example. We find some key points that are great levels to make a support and resistance. Once we set our trend lines, we wait for a momentum candle to break through our resistance. One candle breaks the line, but it does not have a big enough body to be considered a momentum candle. So we wait for 2 more green candles. Once we see the 3rd green candle, we enter the trade. We then put our stop loss below the resistance line and set our take profit to a 1.5 ratio. We then wait for the price to hit our take profit, then we sell half of our shares. After we sold half of our shares, we move our stop loss to our old take profit mark. Then we turn on the chandelier indicator. We then wait to sell the other half of our shares until the chandelier indicator turns colors. Once it does, we exit the trade. I just showed you some secrets to make your breakout trade.
Okay, great. So we've got this strategy. I want to add one thing here, okay? Identifying breakout patterns. He mentioned all these different patterns, right? And we really outlined that they don't look like the drawings on the actual chart. I want to give you a pattern that's the easiest pattern to identify in my experience, and that is a double bottom, okay? DB, double bottom. So we're going to look for a double bottom, and that's going to be our pattern that's easy to identify. So let's actually try this out. And what you'll see here on the chart is one of these patterns that we talked about. So here we have a wedge, okay? And what we're going to do is we're going to wait for a breakout of this wedge, and we're going to apply the exact same strategy to this chart. Now, if we press play and we take this forward, we can see on the open, we had a huge breakout to the upside. That's shown here. But then we didn't get a follow-through candle. Notice the confirmation has to be another candle that shows buying, and the bull breakout here with this gap up shows the breakout from this key level, right? But we didn't get the confirmation. So we're going to wait. Now, what we're going to do here is we're going to watch what happens at that key level. He didn't talk about this, but what we will see if this breakout is strong and going to continue upward, is that this, which was previously resistance down here, because the price went up to that line and then resisted it, and we got rejected back down. Every time we came up to that line again, it resisted it and we got rejected down. And it happened again here and down and here, and it got rejected down here. What happens when we actually strongly break out through that key level is what was then resistance will then turn into support, which means the opposite of what happened here will then start happening. So instead of the price resisting and sending us down, it will resist in the other direction and offer us support and resist downward movement and instead send us up. So let's watch this. And then we're going to put in the pattern he left out, which is a double bottom, to help us confirm that this is actually a bottom and that the price will be likely to move up instead of go back down into that area, okay? So we have one bottom and now we have another bottom. Now notice what we just pointed out here is happening. This is showing you that we came down, we crossed that line, we bounced out. That's what the tail on the bottom of this candle means. And then on this candle, it did it again. So now we have our micro double bottom. You see this little micro double bottom? Boom, boom. So we have a micro double bottom, but we want to now wait for a higher low double bottom. So first we get a micro double bottom, and then we want a higher low double bottom. Now, why would we want a higher low double bottom? Obviously, we would want a micro double bottom or just a double bottom, showing that the price is not moving down anymore. So we got that. We just got a bottom, right? But then what we want is a higher low showing us that the price moved down again, but then made a rejection of lower price movement and sent us upward and reset the price higher. So now we have that from here to here. And why we want that is because that now tells us that we have the first criteria for a uptrend in place, which is higher lows. That means the low is here when we got that micro double bottom, and now the low is here. So we've got a micro double bottom and a higher low double bottom, and that gives us confirmation enough to enter. So again, we are going to enter with confirmation, and look at the size of this candle versus the size of this candle. The second candle is much bigger than the first candle, showing momentum is accelerating, which means the likelihood of this breakout being successful and not being false is good. So let's enter here. And instead of entering 1-to-1 risk to reward ratio, I want to enter at 1-to-2 risk to reward ratio and just let the trade play out. The problem with getting fancy is that you have to sit there and manage the trade instead of allowing yourself to go do other things and let the chips fall where they may. So we'll buy here and then we will see this trade play out. And if we're trading this when this happens, all we need to know is that we were following the strategy that we put in place. And the strategy we put in place is, again, our idea is that this will hold as resistance and that this breakout will be successful. If this breakout's successful, then that means instead of this being resistance, it now flips into support. And so when we come into this area, if we come into this area again, that the price will bounce out of that area and we will get the move up. And as you can see, now we actually can extend this trend line. We just need to adjust it slightly. So let's adjust our trend line that we drew previously and just make the higher low be here. Okay. So now we have this go here. And now watch what happens when the price comes down and touches that trend line. On the next candle, we bounced off it. So now we have another higher low. First, we got our micro double bottom here. Let's actually mark that. So that was our micro double bottom. Then we had our first higher low. Then we have another higher low, and it happened right at the extension of that trend line, which shows confirmation that this trend is going up. So what we want next is we want a higher high. In other words, we want to mark this prior high right here, and we want to see the price break that line. So let's see if the price breaks that line, which will confirm our trade idea, which is that this is a trend going up. Again, we want the lows to get higher, and we want the highs to get higher. And until we break above, we haven't done that. Now, we just broke above that prior high, and so now this is officially a bull trend with higher lows because the lows are getting higher, and higher highs because the highs are getting higher. Awesome. So we're in business, and we're going to continue to see how this trade plays out and continue to follow it. And if you were trading this trade, you could either sit there and manage it if you wanted to, but you could also just leave. And often, because emotions are so difficult in trading, the best thing can be to just walk away and come back at a set amount of time. When I was first learning, that's one of the best things that I ever did, is I did a set it and forget it trade. And I did this for an entire month where I set up one trade once a day, and I would set my stop loss, I would set my profit target, and then I'd come back in an hour or two and see what happened. And I would record my results in a spreadsheet. And after a month, I had the best trading performance I had ever seen in my entire life. It was the best month I had ever had on record, just because I wasn't getting in my own way. So set it and forget it, if you're a beginner, is often one of the best things you can do, because A, you won't get in your own way, and B, you'll be able to actually go back and learn. And what I strongly recommend is that you record your trading sessions. Now, as you can see, the trade just went our way and it was a success. So there is the strategy for how to avoid false breakouts with some of the things that he left out. If you have questions, go ahead and ask those in the comments. Thank you for watching, and I'll see you in the next one. And if you want to learn with me and go deeper, I do live trade breakdowns where I show you the exact trades I took, with how I set my stop loss, how I took my profits, exactly how I analyzed the chart, knowing how to get in and get out. And I do those on my Patreon at patreon.com/tradesbybren. So you can go there to become a premium subscriber or become a premium subscriber on this channel. Thank you for watching, and I'll see you next time.